Today, Monday, October 23rd. I'm back with Imran. How you doing, buddy?
Good to see you, bud. Another week.
Start another week. I'm tired already, man. It's been a lot happening. This is our Monday morning meeting where we both try to focus a little bit more on the single stock side. Both you and I spend a lot of time during the week and in our daily writings and things like that. Really kind of focused on the more macro kind of index side of things. You, of course, cover the macro whole economic side of things a little bit more than I do, but shifting away from the index flows, looking at single stock flows. So today we want to go through a couple names that you're watching. We wanted to talk about earnings, and then I have just one or two names to bring up as well. So let's start by diving in with what you see on the day. Actually, let's talk about earnings quick because that's a little bit more of a headliner. Tomorrow we have big earnings in Microsoft as well as Google, which are implying about 4 to 4.8% implied moves, as you can see on your screen here. Incidentally, if you go to spotgamma.com, hit free tools, you can see this earnings chart. You made an interesting but excellent observation while we were chatting in before that, we had Tesla and Netflix both report last week. And on Twitter here, I have our snapshot of our dashboard. Those implied moves were 4% and 7% respectively, as you can see. And obviously, in both of those cases, the earnings moves were huge, right? Netflix popped 15%. And we had put out on Twitter, say, hey, play for the 400 pin. And then in Tesla, it just did the opposite. It just sank and sank and sank and sank and sank. So these implied moves going into earnings were obviously too small. And you brought up the point, and I think it's a good one. I'm kind of with you on here that it may be the same thing here with Google and Microsoft. I'm actually a little surprised that these implied earnings didn't shift out even a little bit more given the moves in Netflix and Tesla, but there were your comments originally. So what do you have to mention on these?
Yes, so I just think if you look at like the volumes that are going up in options in these names, they are the names that everyone cares about, right? They are the names that there's the most activity. And so I think that there's a likelihood that these names will overshoot in either direction. So obviously, if the earnings are completely in line with expectations, then you can't expect a massive move, right? But if you were to get a difference from expectations, like we saw last week with the other two, the moves are very likely to overshoot these implied. Because if you look at like the kind of moves we've seen historically, like 4 or 5% for these names isn't that much, right? Like 8 to 10 is quite comfortably what these names can do on earnings. So And I just think that the retail crowd goes after them and use options, so that creates the overshoot. So I think at the margin you generally would own them rather than being short them for earnings.
You don't want to be short that ball.
No.
The other side of this equation that I think adds to this is that we are in kind of this negative gamma environment, kind of a high volatility regime anyways, right? And so if the average move is, let's say, 4% for these earnings, this is an environment where things are a little more slippery. They move faster. Vol just can expand a lot more quickly. And I think that's another factor that is probably not as priced in, right? What is just sort of the macro side of things, and how much are stocks just moving? They're all moving a lot, so it's a little bit of a different environment. I'm not sure how much of that gets priced into, to your point. So. Those are two big earnings. And while we're on this topic, Tesla was rather negative, but Netflix was higher. Tesla's considered in that Mag 7 stock index, the top 7, which it may lose its membership pretty quickly here. But Microsoft and Google, they have a different tone, right? They are the leaders. While we're on this topic, anything that comes out of these that could be strong enough to just lift the whole market up. If both of these companies just offer excellent earnings and a lot of growth, and maybe that starts to turn, the pivot the market a little bit here. Any kind of sentiment there?
Well, you look at the chip names, right? They're not looking too rosy because you've got the US putting up barriers on exports of chips to China and stuff.
Yeah, so Nvidia's just been getting slammed.
Nvidia, AMD, etc., have all been trading down a bit. Whereas these Google and Microsoft, they had their pump on AI and then they faded a bit. So they're kind of trading a bit differently to the chip stocks, right?
Yep.
But I think everyone's kind of realized that the AI story, where it's really going to improve growth and margins for these companies, isn't going to be a quick thing overnight. Yeah. So I don't think it's necessarily that much is priced in. It's hard to know how much is priced in, right? They've had such good margins over the last year.
Yeah.
Yeah.
I think it's going to be very interesting. Particularly Microsoft, the OpenAI story and ChatGPT is all that is really quite interesting, and so I think they have a chance to really invigorate that story again. Texas Instruments reports tomorrow on the semi thing, and I'm not a CMT, but that looks like a broken wedge, I believe they call it in technical analysis land on NVIDIA. I mean, that was just really ugly.
400 for me. 400 is the level. If it takes out 400, then look out, that gap from 320 is getting closed, basically.
Yeah, that would be a nasty fill there. So, anyways, that's the macro picture. I do think those earnings tomorrow, if they're both strong, or if they're both negative, I mean, those two together could really be a pivot because there's so much of that, Mag 7 indicator. And if you use MGK is what I've been looking for lately as the Mag 7 equally weighted ETF. Last week we were talking like this looks really good, and then this week we're like, I don't know about this. All right, moving on. You have your excellent single stock strategy, Compass. You have two trades here. Both are sells. You got a sell on CAT and then a sell on McDonald's. You want to walk us through the CAT idea first?
Yeah, so CAT's been beaten up a bit, like 10% off of local highs last week. Just general construction stocks are all coming under pressure. That one of the names reported and gave guidance that demand has peaked potentially. So the stock's come off. It's got some volume support around these levels. Earnings are at the end of the month on Halloween. So I figured you could use, similar to an idea that we talked about last week, like when you've got earnings next week and you've already had a bit of a move, you can kind of now slot some puts for this Friday, nick that premium because the stock's next big move probably happens next week on earnings rather than now. So that's the idea. Just nick a bit of yield out of selling those puts. 240 looks like it's a reasonable distance. And like I said, you've got some volume support there. If the broader market sells off, it may still go down. But it looked to me like a reasonable selling opportunity.
Yeah. I like this idea. I like the idea in general in this higher volatility environment, leaning on earnings and selling before some of these earnings events. We had the Fed on the 1st, and so I'm in the camp that I don't think a whole lot is going to happen on the macro side. If you read our morning founders note sort of saying that, look, the grind down is still in place maybe, but this idea that we're going to have a VIX 30 blow off this week, I don't think is quite on the table. And so this idea that CAT should hold up over 240 just on the macro side of things, I'm in agreement with you on that one. So again, this is the October 240 put. And then on the other side of things, you are shorting McDonald's.
So McDonald's has been getting beaten up for a while now.
It had a nice move last week.
Yeah, it had a dead cat bounce last week, up to 260. But I think 270 is probably not a bad area to get short from. So selling the 270 calls to November looks like a reasonable trade to me because I think it's quite a lot of supply up there at 270.
Yeah.
And so, it's one of those, if fundamentally, analysts have been downgrading the stock and they don't like it still, right? So if you agree that the downtrend is still there and this is just a dead cat bounce, then it's quite a nice entry point to then sell some calls into because the vol's still got a bit of elevation in terms of where the implieds are trading. So it's just, it's an idea to get some yield out of the fact that the stock's had a bounce and we don't see it going through 270 by mid-November. Now,
in this case, we have earnings for McDonald's on the 30th, kind of right around that Halloween date as well. Do you worry about that in selling this call or?
I mean, it's one of those, like if the earnings are blowout, then you might struggle on that, right? But that's partly why the vol's elevated. So it's one of those, you're going to get a vol reset, right? The implied moves, I think 3% or less, something like that. So it's kind of, you could get a situation where you rally 3-4% on earnings, which is the implied move, and you just go to 270 and then the stock kind of dies, right? So I think it's a more aggressive trade than the CAT trade.
Mm-hmm.
So you should only do it if you've got a strong opinion about McDonald's. But it came up on our radar, which is why it's there, basically.
Yeah. And I don't think because there's earnings coming in, I don't think it's necessarily bad. Like you said, it can actually add a little bit of juice to the trade. I brought up our hero indicator here because one of the things that I saw in McDonald's last week, it's a name that's come up a couple of times recently, is The call flow into the name, this is our kind of put wall is 250 area, which is this big support level. The call flow into the name last week was just really, really big for McDonald's. And so you can see here the purple line, moving higher. This is last week, $40-50 million of deltas were going into the name off these major lows. So, what you see here is a lot of put covering, a lot of put selling. And to me, that's short cover fuel, right, to lift a name up. So something to your point here, I think this name was being driven by people closing puts. It gets this reflexive kind of bid to it. And so using that upside volatility to sell calls, I think is really kind of
where's the has it got a call wall? Like where's the kind of concentration on the upside then?
Yeah, right now 260 is the call wall. So we rejected off that on Friday, as you can see here. And so, look, I think that if the market overall catches a little bit of bounce, this will also catch a little bit of a bounce. And if it does, that even adds to the trade a little bit in terms of selling that upside call. I think you generally want to sell calls into moves that have a lot of volatility to the upside, right? And so it's a little counterintuitive, right? I think in that respect for a lot of people where, it's ripping to the upside, well, that's when you want to sell the call, right? Because it has the most energy, arguably.
As long as it's not a GameStop.
That's true. That is true. And GameStop was, we have a squeeze scanner. That one's setting up.
Look at that segue into GameStop.
It's showing up on our squeeze scanner. It's only one of two names. High short interest. Everybody knows the story at this time, but this stock has just gotten, it's finally getting obliterated. I think it's finally moving to the levels that everyone thought it would. And I don't really know what saves this thing at this point. This and AMC both just, just crazy. It's crazy that it took this long to meet reality, I guess. On our side of things, we saw one interesting name pop up on our volatility scanner, which suggests that implied vol is a little bit rich here. And it's Verizon, which is kind of a little bit more of a sleepy utility stock. Generally, it's a little more sleepy, I would say. But obviously, with rates going increasingly higher, it's really pressuring these name down here. So I like selling put spreads in this name. The yield here, which I understand could probably be maybe under duress now that rates are going higher, and obviously as rates go higher, it's going to continue to pressure this down. But I like selling put spreads in this name. I'm in the camp that I think rates are going to slow down, and if that happens, I think this can recover kind of quickly. And so I like selling put spreads, either November or these put spreads out here in Verizon. Do you have a particular view on these utility stocks or Verizon?
Yeah, I did think they were a bit oversold, but they have started to bounce. But rates are a tricky one. I think the rates market, I think yields have done a lot and they've done it quickly. So I do think there's a few things in the rates market that look overdone. Yeah. So some sort of pullback in yields. I'm really surprised at how little safe haven bid bonds have got. I would have expected something, right? They've got nothing on the whole Middle Eastern war thing. I think tactical bounce in bonds is very, very possible in the near term, but just based on skew getting pumped, vol getting pumped on TLT, very pumped, right? Yeah. But I think the bounces are probably still a fade. I think the trend is very much down in bonds, and people who are a lot smarter than me in trading rates, like Andy Constant, that spring, he thinks TLT can go to 60, right? So he thinks we're talking about another 100 basis points in long end yields, right? So long end yields are getting unanchored. Yield curves are disinverting. You don't need to be a hero and catch a falling knife. So I think selling put spreads on short-term put spreads on TLT, I actually sold some last week to November, but I've got limited loss on that. Yep. I'm just trying to be opportunistic, and it's a spread. It's not an uncapped loss that I'm going to take. It doesn't work, and I can stop out of it if it doubles in value or something. Right. But the idea is to try and find a quick little bounce back from sort of 83 to 88 on TLT. I can buy those things back and then get out of the way because it looks like it could go a lot lower. Yeah.
Yeah, I agree with you. And to the same point, I think Verizon is maybe a little bit different. I mean, there's probably some macro guys here, fundamental guys that really know the story a lot better than us. And so what we're offering is a trade on what looks like stretched implied vols, right? And that's not a thesis for what's going to happen 6 months, or even 3 months out from now, right? We're trying to kind of take selective shots here on essentially what amounts to oversold, various oversold levels. So a couple names that show up there like this. The other one was JP Morgan. They had earnings last week. The vault still, popped on this or elevated on this. But again, it's a rate play at the end of the day, right? So a lot of what's showing up on the scanners are in the same thing where, look, if you get a nice bounce or a pause in rates and this November 1st date comes up, then these trades will all pay off very well. But to your point, that could just be kind of a dead cat bounce, right? And then rates, continue higher. So we will be, like everybody else, keeping a close eye on the rate movement. Of course, that's the major sign this morning that, we breached 5%, which as it's a round number, everyone's watching it. That pressured the futures this morning. Futures have recovered a little bit, as you can see on your screen here. I actually think we're setting up for a bounce on the day, maybe 1 or 2 day bounce, just because I think rates are going to chill out before the November 1st date, and that's going to be a really big pivot upcoming, but that is something that's something we'll see unfold over a day here. But you can see that when rates did breach that 5 level, it got pretty ugly here in futures. So, all right, Imran, thank you very much for showing up today, and we'll be seeing you next week. Where can people find you? You've been doing just an awesome job on Twitter, so hopefully people go over there and check you out. Where else can they find you?
Sure. So on Twitter, I'm options_insight. We put out daily stuff on there, show you what we're looking at in options, and then options-insight.com is our website where you can check out what our products are. We've got live courses going on for those who want to learn about options. We've got subscription products to give you trade ideas every day and kind of guide you through these crazy markets.
Yeah, that's crazy markets is right. One of the other things we should note here, if you scan the QR code at the top left or right of your screen, depending on exactly how this mirroring shows up, you can get to our Spot Game Academy, which features the lovely Imran, who walks us through everything through what is an option all the way up into kind of advanced hedging and things like that. And then you can find us at spotgamma.com, and I am at SpotGamma on Twitter. And at a minimum, Imran, we'll be seeing you next Monday.
Sounds good, man. Thanks for listening, everyone.
Take care.